Hello, and welcome to nmkltrader. Now, today I've been doing a lot of thinking and I've had a lot of conversation with a lot of traders out there over the past few weeks. And to be honest with you, the market trend system is just really doing very well. I want to take a few minutes and just ask you a few quick questions here. A lot of us have seen a lot of advertisement out there, a lot of videos, a lot of content on how to pass prop firms. Okay. Now, I want to talk to you a little bit about prop firms today because I've traded Take Profit Trader. Uh, I know a couple people that have done Top Step, and I'm also currently working with Apex Trader Funding on my prop firm accounts. Okay. The reason I bring this up is because I want to share with you something that a lot of people don't understand when they jump into just trading prop firms. And you need to be with a community of traders that have experience. And I'm not talking these free fall trading ideas to go ahead and pass your prop firm eval account or these dollar DCAs, dollar cost averaging strategies that so easily get you to pass your prop firm account, eval account. But then when you get into your performance trading account or your funded account, then you still use those same discipline measures that you had entering and then somehow get in trouble with the prop firm. So today I want to take a few minutes really quick and strategically talk about what to look out for. Okay. And then I'm going to share with you something that will help you pass your prop firm account even better. Okay. But before we do that, I need to let you know that anytime I talk about, you know, futures trading, there's always risk. Okay. Whether it's stocks, futures, options, currency trading, they all have risk. Keep in mind, anything I talk about here is not indicative of your future results because you simply are the one that pulls the trigger, not me. Okay. If you have any questions about trading as an investment, please reach out and see a licensed financial advisor. That way you make sure it's suitable for whatever type of investing you're trying to do. All right. Without further ado, let's go ahead and jump into this. Now, today, what I want to do is I want to talk about first, what are the 5 reasons people fail? What are the 5 reasons why people fail a prop firm account, eval account? Okay. Now, the first one, over leveraging or oversizing. It's not that difficult to understand this. Traders want to hit their target profits fast or recover from losses quickly. Okay. And as this results in a few losing trades with a large position size, can wipe out your account or trigger max daily drawdown. Okay. These are things that you'll hear them talk about in the prop firms once you get in there and start working with them. All right. So over leveraging, oversizing, because the first thing you want to do is you want to get done. You want to get through that eval account. You want to knock it out and you want to be making money right away. Well, that's possible, but it's also risky. Okay. Common signs of a lot of this, somebody's looking over your shoulder, risking more than 1 to 2% of a trade, that of your account size, going all in after a loss, trading impulsively with large lots. Okay. Trust me, I've done it myself, but this will not allow you to get profitable with a prop firm. Okay. The second reason why people blow these prop firm eval accounts is risk, lack of risk management. Okay, just a second here. Let me pull this down just a bit. Lack of risk management. Now, why does it happen? Traders ignore stop losses. They don't look at what the risk to reward ratio is, or they don't define risk per trade. Now, you'll see that I talk a lot about 40 ticks take profit, 80 ticks stop loss. but I do that to allow the market to run. Okay. But it's not a significant amount that's going to cause you to wipe out your entire account. What happens when traders ignore stop losses, risk to reward rules, or define risk per trade? They result in prop firm failures. You violate rules such as the trailing drawdown, daily loss limits, and these lead to instant disqualification. Then you have to pay that reset fee and get back in and start all over again. Okay. So there's no stop loss used usually. Common signs of this: moving stops further and further away to try to stay in the trade, or letting losers just run on you. Okay. So this is the second reason why most traders fail prop firm eval or their accounts. Okay. Or they get disqualified for some reason for trading on the prop firm. Number three, pretty, pretty explanatory: emotional trading. We've all been guilty of this at some point, and if not, still today. Emotional trading. Why it happens after a loss? We want to get that money back. Traders revenge trade to get it back after a win. They get greedy sometimes, or you just overtrade. You're in the trade room way too long every day. Okay. So the result is breaking your strategy discipline, blowing limits in emotional trades. Okay. And a lot of this comes to doubling down on a loss, trading out of anger or euphoria, not knowing what you're doing. If you're just trading and you can't sit there and say, I'm trading because, you just need to stop. Okay. But that's what that is. Common signs of this are doubting or doubling down after a loss, trading out of anger, euphoria, and abandoning a plan mid session. Okay. So you need to have a trading plan. You need to have things that you put in front of you that will trigger you to keep you away from this emotional trading. One of the things that I look at: 1 to 2 trades a day. Okay, that's it. Get out. Don't overtrade. All right. Secondly, follow a trade plan. Know what your daily target is. Once you've hit that, stop, walk away. Don't go out there and brag about your winnings. It's part of a regular job. Okay. Just go out there and have fun. Come back to the trade room. No emotional stress. Do not bring in revenge. Do not let go of greed. Let go of fear. Okay. These are just some things that can help you. All right. The fourth reason is um, strategy hopping. Now, we've seen this a lot. We've all been guilty of it. Or if you just don't have an edge, why it happens: traders don't stick to one system long enough to trade random, or you trade random setups with no statistical edge. Sorry about that, folks. This happens a lot. I mean, I chased a lot of different strategies out there, going from trading on Nadex, trading binary options, to uh, trading Forex, and the amount of strategies that we went through. And then over here, um, I finally have learned: wash, rinse, and repeat. Wash, rinse, and repeat. The same old strategy over and over and over and over again. It may get boring, but guess what? It's doing what you set out to do with trading. Put money in your pocket. It's that simple. Why change it if it works? Don't break it if it's not broke. All right, you've heard all that before. And this is the reality. Okay. Number four, I'm not going to sit here and harp on that. What results from this: inconsistent results, confusion, lack of confidence, and disqualification from these programs over time. You change strategies weekly, monthly, chasing indicators, relying on hope. All right. These are some of the big downfalls of that fourth reason why most traders fail these eval accounts. And fifthly, all right, here's one: trading to pass the evaluation, not to trade well. Here's, I've seen a few YouTube videos out there where they tell you, oh, well, know what your account size is, know what you need to do to pass that eval, know what that profit target is to pass that eval and get, just go up there and take a trade during the news or at the open or on a time when there's going to be high volatility and take that risk. And if you don't make it, reset it, but you're going to pass it quick. I've heard people say that on YouTube. It's out there. It's that crazy. The problem is when you're done, and I'm going to share this with you in a minute, um, you don't pass your funding account or your performance account because what happens now is you don't even know how to trade. And most prop firms are looking for consistent people with good risk management, professional traders. Those are the ones that stick in there and you see the payouts time after time after time after time, getting them consistently. All right, here at nmkltrader, we are teaching people to do that. And I want to stick to that as much as possible. Okay, so those are the 5 reasons. Traders focus on hitting 10% target quickly instead of following a repeatable process. That's why it happens. You take unnecessary risk in rushing setups. Usually you end up in a rule violation and you get in trouble on these prop firms. And then all of a sudden, you just catch yourself and you're like, why? Now, another thing I want to talk about out there that I see on a lot of videos real quick is dollar cost averaging. Now, if you've been on Nadex, I'm sorry, not Nadex, if you've been on Apex Trader Funding and tried to get qualified, you'll know that they were for a little while against dollar cost averaging. They've kind of let it back in the window, but I expect sometime these prop firms to change their rules to go, lean towards letting you do DCA, and a lot of times they lean away from it. Now, let me just talk about it for a few minutes. Prop firms enforce strict drawdown limits, and they do this because they want consistent traders. Some of these prop firms like FTMO, Top Step, Apex have daily and sometimes total drawdown rules like 5% daily, 10% overall. Go to their website, they'll have that information there for you. DCA, dollar cost averaging, inherently adds to losing trades or losing positions over time, which increases your drawdown, gets you close to hitting that limit. 1 or 2 bad DCA cycles can fail the challenge and blow the account. It's that simple, regardless of long-term logic. Okay. Another reason is the risk per trade must be tightly controlled. Prop firms expect consistent risk control, usually of 0.5 to 2% per trade. DCA violates this by increasing position size as the trade moves against you. This breaks risk protocol and shows lack of discipline, which firms penalize. They will penalize you for this. DCA, now, why is it an investment strategy? Because it's a long-term investing strategy, not the short term. DCA is best for buying and holding retirement portfolios. Okay. A lot of us do that in those. Okay. Prop firm trading is short term and it's performance based. It's a daily challenge out there. Okay. There's no time to wait for DCA to play out. You have to be right quickly or cut the trade. Now, a lot of people are going to tell you, well, I passed my eval account using dollar cost averaging. Yes, you did. But did you do it effectively? And are you consistent in your funded account without blowing it? Now, some people can make it, and kudos to them. But what I'm looking at here is the majority of the masses. And I want you to be successful. That's why I talk about this. Okay. DCA also, dollar cost averaging, also assumes unlimited capital. Prop firms give you limited capital. Okay. The size of the account they give you is not your risk. Your risk is what that daily drawdown is. Okay. You can grow that risk by, winning a lot of trades and building that account up. But don't think for 1 minute if you're trading on a $150,000 account that $150,000 is your risk. Your risk is, or your capital risk is the amount of that drawdown. That is key to understand. So you don't have unlimited capital. Prop firms accounts don't let you reload with real money. You're capped. All right. You can reload in the fake simulated accounts, but not in the real money. That means you're DCAing into a fixed size pot, which makes risk balloon quickly. All right. It eats at your drawdown so quick. All right. Another thing is DCA gives you a false sense of averaging into safety. Traders DCA thinking they are getting a better price, but in prop setting, the logic is dangerous. The trend might be against you. Market may not bounce before you hit your drawdown limit. A lot of times you got to be in and out of these trades in the same day. Okay. Prop firm traders want, uh, prop firm traders or prop firms want their traders who cut losses fast, not those who hold on and hope. Okay. So that's what DCA does. It's more of a long term strategy for investing. Now, let me talk about what prop firms do want. They want you to have tight risk management built within your trading portfolio, fixed or scaling with good risk to reward. They want clear stop losses defined. They want to see that you have a trade plan. They like disciplined exits, not adding to losers. This is very key for you to understand while you're trading on prop firms. Let me tell you, get out there, hear what you want in these different Discord groups. But at an MKL Trader, we're going to speak truth. We're going to help you get there, and we're going to help you do it right. It might take longer to pass that prop firm account, but we're going to teach you how daily. Now, let me share with you something that will help you get there. It's called the market trend system. And I'm going to show it to you today. And I'm also at the end of this video going to share with you how you can actually get the market trend system and get started with it. All right. Without further ado, this is today's market. Let me go ahead and spread that out there so you can see what's going on. This is today's market on the NQ, the NASDAQ 100 E-mini futures. And I traded it. I usually start, now I trade here in San Diego, and I usually have Pacific time on my charts, but this time for the purposes of this video, I am using New York time. Okay. Now, I usually wait a little bit after market open at 9:30 a.m. New York, okay, and to see what the trend's going to do. Well, today was kind of, just kind of sideways. It got into a channel. It did go down a little bit, but not a whole lot. Okay. And then it just, but we can still pull those trades out of there. First of all, the market trend system has a micro trend, which is what you see the candle colors up here. And it has a macro trend, the histogram at the bottom. All right. And when the two agree, you have blue on the top and blue on the bottom. We simply place a buy. We buy it for 40 ticks and we put a stop loss for 80. Okay. And you're going to win greater than 80% of the time if you trade during the hours I trade. That is phenomenal. Now, when you employ good stop losses, when you employ, you know, overnight highs, overnight lows, yesterday's highs, yesterday's lows, and good support and resist management, that can even move up closer to 90%. All right. So let's go ahead and look at today's trade. Right here, we get our first agreement. Let me just put some green lines here where we get our agreements. Buy on blue, sell on red. It's that simple, folks. Here you see the flip at the bottom. We're already in blue candles. I go ahead and place my trade. You can see my take profit up here. You can see my stop loss on the bottom, and you can see that was a winner. All right. Now, going on here, I'm going to share something with you that we use and teach here at NMKL Trader. It's called setting buy stops. Now, here we get another agreement. Let's go ahead and put a green line there. Oh, this is the beauty of trading the NMKL Trader system, market trend system. Now, if you look at this, what I do is I put a buy stop just below the wick of about 2 to 3 ticks. Okay, you choose. But what it does is a lot of times it keeps you from getting into a trade you don't want to be in on these long wick candles. All right, and you see the market pulls back up here. Now, because the histogram down here flipped to blue, it goes ahead and negates that trade. So I never get into that trade. It's that simple. All right, going on over here to the next opportunity. We get another trade right here. And this is the flip right here. And you can see with my tool there from TradingView, the below is the take profit amount, and the red back here is the stop loss. We never hit our stop loss. We did hit our take profit. That's another winner this morning. Okay. Roughly with one NASDAQ contract or NQ contract on the E-mini, it's about $200. If you're trading 2 or 3 contracts, then you're getting up over your target of $500. Okay, so just keep that in mind when you do trade this. And when you get into an MKL Trader and you purchase the market trend system, you will see how we trade in here and get into our Discord community. All right, going over here, you see that we have another trade. Again, we have a red on red, so we're going to sell. Buy on blue, sell on red. There we go. And you see we achieved this trade. We hit the take profit on this right down here. And then we go over here. Now I'm transparent. We have another alignment right here, okay, which allows us to go ahead and get into this trade. But you can see that the trade went against us. We're not going to win every trade, folks. If I could, I wouldn't be here training you. I'd be out there winning all the money in the market. And eventually I'd probably get in trouble by the Securities Exchange Commission. But the point is, you cannot win every trade. So we don't win the trade here. But what we do is when this flips back to red, we cut our losses. Okay. Either this flips back to red or we get a flip here. But on the bottom, we got a flip. So we're like, okay, let's get out of it. We lost 20 ticks. It's 14 we're done. Hours. Okay. And then we go on, and now all of a sudden we get another agreement. Now the micro trend starts to agree with the macro trend down here. We get into this trade. We have another winner. This one takes about 20 minutes, 30 minutes because the market's kind of sideways today. But we still won our 40 ticks, and we're out of that trade. And then as the afternoon goes on, this is the last trade I would have gotten into here. Let's go ahead and put an alignment there. And you can see, again, we get into this trade and we win this 40 tick trade. Now, a couple of things. Why 40 ticks? It's a sweet spot for NQ on a 1 minute chart. All right. And we trade 1 minute charts because that's a day trader style. We trade fast, we get it done. I don't trade usually the first 30 minutes of the market, and I stop by 1400 New York time. Okay, 11 a.m. out here in San Diego. Reason is after that, yeah, there's some volatility sometimes at the end of the day, but I'm only looking for 1 to 2 trades a day for my own portfolio, and then I'm done. Don't overtrade. Don't emotional trade. See, if I get emotional and I've already got my 1 or 2 trades, then I'm done. I'm out. If I lose too much, I have target for losing. If I lose that target, stop for the day. There's always a new day. Come back tomorrow with a refreshed mind. Okay. So at NMKL Trader, you've seen me just share with you the market trend system. To me, it is by far the best system out there because it has helped me take the stress out of trading, and it can for you too. All right. I hope this has been very informational. This is Nate at NMKL Trader Community. And if you want to purchase the market trend system, take a look at the link and in the description below to find out more information. This is something that makes it so easy. You don't have to sit there and holler about it. You don't have to sit there and get mad. It's just blue and red. Buy on blue, sell on red. And just a little bit of those nuggets that you learned in your trading experience about stops, about losses, about support, about resistance, about trading the market when it's, most active. Those are key things. And there's some reason, trade the trend, there's some reason why people always continue to talk about those. All right. If you are very interested in the market trend system, look in the description below and you will see how to get started with us today. Great day, everybody. Take care.